the key to success in investing over a long period of time is staying the course, understanding what it is you're looking for, having a base philosophy of what you're trying to invest in. And in these portfolios, what we're really trying to find for all of our clients throughout our strategies are the best growth companies in the world, and companies that over a long period of time will create value for shareholders. Ultimately, what we're looking for are companies that can produce free cash flow to either reinvest back in their businesses without coming back to existing shareholders or pay out to shareholders in the form of dividends. Right now, however, inflation is not the problem that we find in the developed market space, but it is a problem, an increasing problem in some of the emerging markets, because a lot of the funds flow and the liquidity is ultimately ending up in these emerging markets. If you look at, these slides are a little bit hard to decipher, but the equity returns in emerging markets have been very healthy for the last several years, and I think that goes to the fact that there was no financial crisis in emerging markets in 2008. Decline in the equity markets in these countries were essentially driven by fund flows and essentially fear. But the fundamentals remain very strong in emerging markets. They remain strong to this day in emerging markets. And that is what ultimately is driving global growth here going forward for the next several years. So if you're going to have a global investment outlook, at least in the short term, you have to have, I think, a pretty good perspective on what's going on in emerging markets. Emerging markets continue to be relatively healthy. The growth is continuing, although, as I say, the risks are increasing because of inflationary pressures. Emerging markets aren't necessarily any more expensive than the U.S., although I also think that in terms of the developed markets, we're also seeing some value appear in some of the other markets. I think that the trend here over the next several years is going to be that the low economic growth rates in the developed markets are going to lead to undervaluation. The high economic growth rates in emerging markets are probably going to tend to lead to overvaluation in emerging markets. So you're going to have to look at where we are, growth versus valuation, across the entire spectrum of investment opportunities in the world outside the US or Canada.